Hi, my name is Perez Goree of Perez Goree & Associates Certified Public Accountants. I've been practicing in the accounting profession for over 20 years, and I thought it would be a good idea to share with you small bits of tax and accounting advice to help you save money on your taxes. I'll be sharing these videos with you periodically. Top tax mistakes of business owners. Many business owners don't have the expertise of doing taxes, but they still decide to do them themselves, and they don't want to seek out the advice of a tax professional. This is not the best situation, as a business owner's taxes sometimes become complex as their business grows, and they don't have representation if they're audited. Many times business owners miss out on deductions that they just may not be aware of. A lot of individuals may miss out on like a home office deduction. They don't know the rules and regulations of how to properly calculate the home office deduction. Another problem individuals may run into with doing their own taxes is if they are ever audited, they don't have anyone to represent them. And at that point, they probably would have to seek out a CPA to assist them. So it may be wise to have a CPA take care of the taxes on the front end rather than waiting for a problem to occur. The second mistake a lot of business owners make is not having good tax records or a tax organizer. Tax organizers help you keep track of your deductible expenses. Also, the IRS requires you to keep a tax diary or some sort of method to keep track of your deductible expenses. The IRS is very interested in knowing about your travel and entertainment expenses. They really want to know the who, what, where, why, what were the reasons behind these expenses, what was the purpose. A good tax journal will keep track of that. In the accounting world, we have some jokes that we say. We say, pack rats, pay less tax. The more things that you can document and keep track of, the better chances you have of bulletproofing yourself from audit. Another mistake that business owners make in doing their taxes is getting excited about getting a big refund. Well, what a big refund really means is that you gave the government an interest-free loan throughout the year, and they're just merely giving you back in the form of a refund the money that you loaned them throughout the year. Some of the keys to tax planning and tax strategies is to minimize your tax liability and for you to keep more of your money throughout the year. One of the goals should be to get a minimal tax refund or come close to break even as possible and keep more of your money throughout the year. There's a concept that talks about the time value of money, which says that $1 in your hand today is worth more than $1 in your hand tomorrow. Having that cash flow in your business throughout the year is much more advantageous to waiting for a big windfall at the end of the year. Some other problems business owners run into is they actually spend the money that they're withholding from their employees' paychecks to run their business. Think of yourself as a co-partner with the taxing authorities. You withhold the payments on behalf of the employees, and your responsibility is to submit those payments to the federal, state, and local governments. I ran into this situation several years ago where a business owner actually used those funds withheld from their employees' paychecks to run their business, and the government actually came and shut the business down. You don't want to misappropriate funds and run into problems with taxing authorities. Another problem many businesses have run into is classifying all of their helpers as independent contractors rather than employees. A business owner is not required to withhold payroll taxes from an independent contractor, where they are required to withhold payments for an employee. So a lot of business owners don't really want to deal with payroll tax issues. They would just rather classify the individual as an independent contractor and let that individual deal with their own payroll taxes. You can run into a lot of problems if the IRS deems that independent contractor truly was an employee. Some of the keys to determining if an individual is an employee is you have to ask yourself, do I control when the person works, how they work, for how long they work, and do I supply them with the tools that they need to do the job? If you answer yes to most of those questions, then you probably have an employee and you need to withhold payroll taxes. Another problem individuals, and particularly small business owners, run into is poor separation of duties. Unless you have a personal family member that you trust to handle your finances, you want to have good separation of duties. You never want to have the same individual write the checks as well as reconcile the checkbook. That's a recipe for disaster. That's a recipe for fraud and theft. The key to mitigating this risk as a business owner is to not allow the employee to have the opportunity to have access to your records as well as your cash. If you don't want to make the same mistakes that other business owners have made in the past, contact us for any accounting or tax advice. Thank you.